All right, let's dive in today. We're talking about protecting your income,
Yeah.
which is something so important for professionals, right?
Yeah.
I mean, it's your biggest asset for so many people.
It is. It is.
Yeah, and so we're going to actually take a look at a real-world example of how disability income insurance works.
Okay.
And the example comes from a discussion of MassMutual's Radius Choice disability income insurance.
Okay.
And the example they use is this guy, Dave, a 35-year-old dentist.
Okay.
So really hitting home for our audience.
Yeah. Yeah, absolutely.
So he makes a good living, $225,000 a year.
Okay.
Like many people, he's got student loans, a mortgage. He's got a growing family, saving for retirement.
Right.
You know,
Typical.
all those things, right?
Yeah.
So he starts thinking about, how to protect his income.
Yeah.
And that leads him down the path of disability insurance.
Right. Makes sense.
Yeah. So let's take a look at some of the options that were presented to him.
Okay. Sounds good.
So the first one was a real comprehensive coverage package.
Hmm.
So it gave him a monthly benefit of $10,900.
Okay. Wow.
Yeah. And it included all these riders, right? These extra layers of protection.
Yeah.
So he had the own occupation rider, which we'll talk about in a little bit more detail.
Yeah.
But that's so key for specialists.
Right.
And it had a cost of living adjustment, or KLA, so that his benefits would keep up with inflation.
That's important, right? Because if you're getting a fixed amount every month and inflation is going crazy, you're really losing buying power.
That's right.
Okay.
He also had a future insurability option, FIO.
Uh-huh.
So this would let him increase his coverage later on down the line if he wanted to.
As his income goes up, maybe, or his family grows or something.
Right, exactly.
Okay.
And then a catastrophic disability benefit rider.
Okay.
Just in case the worst case happens.
Right, right.
So this whole, package, it's pretty robust.
Yeah.
It had a 90-day waiting period before the benefits would kick in. And then the benefits would extend all the way to age 65.
So a long time, potentially.
Yeah.
Okay.
And the annual premium for all of this was $6,765.84.
Okay.
So, you can see this is really like the maximum security option, right?
It is the most comprehensive, for sure.
Yeah.
It's got all the bells and whistles.
If he got sick or injured and couldn't practice dentistry anymore, he'd have that income stream.
Yep.
It would adjust for inflation.
Yeah.
He could even, increase it later if he needed to.
Okay.
But you know what? If those extra features like the CLA and the FIO just weren't in the budget.
Right. Budget's always a consideration.
It is.
So what's next?
Yeah, so that's where option 2 comes in.
Okay.
So this one still had that same monthly benefit of $10,900.
Okay.
And it kept those really important own occupation and CO riders.
Okay.
But to bring the cost down, they removed the CLA and the FIO.
Makes sense.
Yeah, so the 90-day waiting period stayed the same. The benefit period to age 65 stayed the same. But now the annual premium is $5,209.44.
Okay.
So, noticeable savings there.
Yeah.
But what's interesting here is he still has that protection that's specific to his profession.
Right.
As a dentist.
Right.
And the coverage for severe disability.
Right.
So his long-term earning potential is still protected, even without those extras.
Right. He's really prioritizing there.
Yeah, exactly.
Okay.
And then there was even a third option that was even more budget-friendly.
Okay. I'm intrigued. Let's hear it.
Yeah, so this one, they cut the monthly benefit in half.
Okay.
Down to $5,450.
Right.
And they shortened the benefit period to just 5 years.
Okay. So it's for a shorter period.
Yeah.
Okay.
But it still included the own occupation and the CAT riders.
Okay. So he's still got those key protections.
Yeah, he still has those key protections.
Okay.
And the 90-day waiting period was still the same. But now the annual premium is only $1,847.28.
Oh, wow. That is a big difference.
Yeah. So this option shows you can still get meaningful protection.
Right.
Without having to break the bank.
Absolutely right. And it all comes down to what your individual needs are, what your risk tolerance is, and what your budget is.
That's right.
So it's a real balancing act.
Yeah.
Okay.
And, we've talked about this own occupation rider a few times.
Yeah.
But I want to dig into that a little bit more because, for someone like Dave, who's a specialist.
Yeah.
Why is that so important?
It's really important because it's really tailored to your specific skill set.
Okay.
So for a dentist, if he were unable to, use his hands for some reason to perform, the very specific, details of dentistry,
right,
then the policy would pay out.
Okay.
Even if he could theoretically do another type of work.
Right. So he could go work at like a hardware store.
Right. Exactly.
But he wouldn't be able to be a dentist.
Right.
That's why it's so important. And it's worth pointing out that all of these options had a level premium structure.
Yeah.
So Dave's costs would be predictable over time.
Yeah, that's peace of mind, right?
Exactly.
You know what you're going to be paying.
Yeah.
Makes it easier to budget.
Exactly.
Okay.
And they all had that consistent 90-day waiting period as well.
Right. Yeah.
So, that Dave's example really highlights, that there's no one-size-fits-all approach to this.
No, not at all.
Protecting your income.
Yeah.
It's about your individual priorities.
Right.
Whether it's, going for maximum security like that first option.
Right.
Or, trying to manage the cost like with option 2 or 3.
Absolutely.
But the key takeaway here is that you need to be thinking about this.
Yeah.
Right? You need to be thinking about protecting your ability to earn.
You do, because it's so easy to just think, oh, that'll never happen to me.
Right.
But you just never know, right?
Just never know.
So it's better to be prepared than not.
Exactly.
Okay.
And it really comes down to like what's your most valuable asset.
Exactly.
For a lot of professionals, it's not a fancy car or, a big house.
Right.
It's their ability to generate income.
Yeah, it's their human capital.
Exactly.
That's what's bringing in the money month after month, year after year.
Exactly. And so you got to protect that.
You got to protect it. Absolutely.
So, thinking about how you would navigate your financial obligations if you couldn't work.
Yeah.
That's so important.
That's key. It's all about planning.
Right.
And thinking ahead.
Yeah.
Because you don't want to be caught in a situation where suddenly you can't work and you have no income and you don't know how you're going to pay your bills.
And then you're scrambling, right?
You're in a really bad spot. Yeah. You're under a lot of stress.
Yeah. So this is about getting ahead of that.
It is.
So I hope this has, gotten some wheels turning for our listeners,
yeah.
About their own situation.
I hope so too.
Maybe it sparks some questions about different types of riders that are out there.
Right. Or how benefit periods work, or, what your waiting period should be. Right. There are so many things to consider.
Yeah. And we just scratched the surface here, but hopefully this deep dive, has given you some things to think about as you continue building your own financial safety net.
Absolutely. And remember, you don't have to do this alone.
That's right.
There are resources available, financial advisors, websites, articles.
Exactly.
All kinds of things to help you make the best decision for your situation.
Yeah. Do your research, talk to a professional, and, make sure you're protected.
Absolutely.
Awesome.
Thanks for having me.
Yeah. Thanks for being here.
Of course.
All right. That's our deep dive for today. We'll see you next time.
Sounds good.